As a last question, I would ask, is there anything that we didn't ask that you're like, why aren't people asking about this? This is important to know about. Is there anything that you think we left out that might be important to add?
The one thing we haven't talked about, and we keep talking about holding down the tax bill, is retirement savings.
Okay.
And that's something for independent contractors and subchapter S or LLCs. That's a big difference between being an employee. With an employee, you're probably going to get a 401k plan. Pensions are almost non-existent anymore, but there's going to be something at work they're going to encourage you to save for your retirement. And it's hard to save for your retirement because that means you got to put money aside. But the law is filled with breaks. Either IRAs. I think you put $6,500 in an IRA this year. You have to make this big decision. Do you want a traditional IRA, which lets you deduct what you put in if your income is low enough? It's about $80,000 for a single or $160,000 for a married person. If your income is below that, you can deduct what you put. That's $6,500 you put in the IRA, which is great because it might save you, $3,000 for taxes. Or you can pick the Roth IRA. And the Roth IRA, no deduction now. But in the future, traditional IRA, every dime that comes out of it is going to be taxed. A Roth IRA, every dime that comes out of it is going to be tax-free. And since the Roth was created 25 years ago, I have recommended it to everybody. With the traditional IRA, I'd like to say you take the IRS on as your partner. If you get a 28% deduction when you put the money in, the government gets 28% of every nickel that account earns throughout the rest of your life.
Okay.
With a Roth, you pass up that 28% once. Everything is tax-free. Mm-hmm. So the other thing with people who are self-employed, Schedule S, you can have what they call a KEO plan. Much bigger deductions, up to 25% of your income you can put into the KEO. Now you have to set it aside, but it's so crucially important to take care of your own retirement because people are worried about the future of Social Security anyway. I can't recommend it enough to take advantage of either the Roth IRA or the KEO.
Okay, so if people aren't putting aside money for their retirement, they're going to end up in a tight squeeze in the end. You said for most people, you think that the Roth IRA is probably the superior one.
Yes.
Because you're not getting a tax break on it now, but you're potentially spending more money on paying taxes on it when you withdraw it in the future.
Right. The interesting thing is, we've run all these numbers. They work out exactly the same. Whether you pay the tax now or pay the tax later, you will be exactly the same place if your tax bracket stays the same.
If it stays the same.
But most of us expect taxes to go up in the future because they're relatively low now. If you're just starting out your business, you might be in the 10% bracket and you might be in the 30% bracket when you retire. So suddenly that tax-free income is that much more valuable. It only works against you if you end up going into a lower tax bracket. And that's only financially it works against you because I can tell you, I invested heavily in the 401k and in traditional IRAs. And almost all of my money now is tied up in IRAs, which is great, except every nickel I take out is taxable. I've got a very small Roth IRA, and if I need to pay for the new roof, I can take $2,800 out of the Roth IRA. I don't have to pay any taxes on it. Mm-hmm. If I need $2,800 from the other IRA, I've got to take out $3,500, so Uncle Sam gets his share, and the roofer gets the rest. So the flexibility that the Roth gives you in retirement is invaluable.
What if you wait until you're not working, right? You're like completely retired, you don't have an income. Does that change in terms of like where your tax bracket is for your income? Does that change how those distributions are taken and how much you're paying on it? It
can, and 30 years ago, everybody assumed they'd be in a lower tax bracket in retirement.
Okay.
Part of your Social Security benefit is tax-free. 15% of it is tax-free. So even if you got a good Social Security, part of it is tax-free. The more affluent people are finding themselves in a higher tax bracket now because with an IRA, once you're 73 now, you have to take out a certain amount each year, even if you don't need to spend it. Okay. So that can keep your tax bracket high.
Okay.
And also because there are fewer tax brackets than there used to be, it's more likely you're going to be in the same tax bracket. Very few people are finding that they're falling into a lower tax bracket in retirement now.
Gotcha.
Poorer people are still in the 10% bracket. They're going to stay in the 10% bracket. Richer people are still going to be in the 35% bracket. Most people are finding that hopefully your income doesn't fall off a cliff. Mm-hmm. Now, if you save money in a taxable account, so when you take money out, you don't have to pay taxes on it because it's your own money. You've paid all the way along. But again, most people we find, except the very wealthy, they don't have a lot of money in taxable accounts. Their money, just like me, is in an IRA. So every nickel I take out, it's taxed just as it was with my salary, except there's no Social Security tax on it. There's that advantage. But I think you can't count on being in a lower tax bracket, and you don't want to be in a lower tax bracket in retirement.
Sure.
It's like all those expenses because you don't want to have income. No. You want as much spendable money as you can.
Gotcha. Okay. Yeah, I think that's interesting, and I think that's something good to clear up. In terms of people kind of assume that they're going to be in a lower tax bracket, and so they might not think a Roth IRA is a good investment. A good place to put their money. But what you're saying is that you can most likely count
the same, and the flexibility you get for those tax-free withdrawals is very valuable.
Gotcha. So the potential benefits far outweigh the potential downside of it. Okay. All right. Well, I definitely appreciate you being here with us today, and appreciate all the insight and answers to our questions.
It's been great. Thank you.